Hello, welcome back to Core Finance. I'm Matt Brown. I'm joined by Connor Campbell, who is a financial analyst at Spreadex. Connor, thank you for coming in
Thanks
today.
very much.
Right, last video of the year. Let's have a look at the FTSE and cable. Look at the pair. I mean, starting off with cable. How are we going to end the year? What's there to move, shake this particular market?
I think it's all about the tax bill. I think it was interesting on Monday. The dollar was sort of reticent to join in with the Dow's gains. Really, the dollar was a bit more sceptical. I guess it's because the Dow Jones, the companies in the Dow Jones, are going to benefit hugely from the corporate tax cut. However, I guess the dollar was looking at, well, what does this tax bill do for the wider economy? How does it stimulate growth? And I think maybe there were some, not concerns, but some doubts, some question marks, and I think that's maybe why the dollar wasn't quite as explosive as the Dow Jones yesterday. Obviously, you now got pound back above 134, or at least lurking around that level this morning. From our clients' perspective, the moment it sort of crossed that level, they were selling. I think everything is sort of weighted towards the US this week. You've got the tax bill that's likely going to go through, and I imagine the dollar will get some kind of rub from that, even if it isn't quite as grand as whatever the Dow Jones ends up with.
And do you think there'll be just a relief that it's happened this side of Christmas and the New Year than this is actually positive for the market?
Yeah, I think it's in terms of wider, obviously the corporate tax cut, it's clear the benefits of that. In terms of its wider impact, it is unknown. So I think it is more, like you said, relief that the Republicans and Trump have finally got something done. It's been a year of sort of missed opportunities and false starts and things like that. So the fact that they're as close as they could get, they've actually got something through by the skin of their teeth. I think that is where, from the dollar perspective at least, where the gains will come from. You've also got the US final Q3 GDP figure on Thursday, and then the UK final Q3 GDP figure on Friday. Obviously, trading might become a bit more quiet as we head in towards the end of the week and people's sort of attentions turn towards Christmas. But out of those two figures, both are expected to come in as they were in the second estimate. I think at 3.3% for the US at the annualised rate and 0.4% for the UK at the quarterly rate. However, the US figure, I guess, tends to, if one of them is going to be different than that estimate, it's probably going to be the US figure. That tends to have a bit more room for revision whenever it comes to these things. So if that can creep any higher, again, that boosts the dollar. I just think everything is sort of aimed towards the dollar this week. And even with those figures, if they do remain the same, the tax bill is going to be the dominant thing, and I can't see the dollar not getting something from that. So like I said, our clients selling around the 134 mark. How far the pound falls, I'm not quite sure, but our clients, they clearly just didn't like the pound being above that mark when it hit there yesterday.
And looking at the FTSE, had a little bit of a boost over recent sessions. I mean, obviously global equity markets moving higher. Maybe not looking so much at what sterling is doing. It could just be a bit of window dressing by fund managers into the year end. It
was interesting, we've sort of spoken for the last few weeks about that relationship with the pound and the FTSE, and is it still there? It was interesting to see on Monday that, despite the pound posting some pretty chunky gains against the dollar, the FTSE itself was still up, 0.6, 0.7%. Granted, that significantly trailed what its sort of Eurozone peers are doing, and it was behind what the Dow Jones was doing.
The theme for the year, though.
Yeah, exactly. It's the fact that it managed anything, that sort of sums it up. The FTSE has constantly been the laggard behind its peers. But the fact that it's still, it's above 7,500. This morning it's hit 7,550. That's the first time since, something like the 7th of November. Interestingly, from our clients' perspective, there's been a fair amount of support around that 7,500 mark. I think there is just a sense of optimism with that tax bill that is sort of just, it's the final week before Christmas. I don't think people are looking too much at nuance, and I think that is benefiting the FTSE because it's just this sort of global Santa-ish rally, but mainly driven by, just the tax bill being in Santa's sack. And I think it's just, like I said, nuance trading pushing the FTSE higher because everything else was higher. I think that's why you saw it grow despite sterling also getting the rub against the dollar on Monday. So like I said, our clients supporting around the 7,500 mark, which is, first time in a while I think that they've been particularly positive around the FTSE.
So feeling a bit of festive cheer into the year end, positive on the FTSE. On that note, Connor, thank you very much for joining us.